Welcome back. For starters, we like to start off more or less flattish. The good news overnight is US markets ended in the green and crude oil prices have cooled off a little bit as well. But we listed down all the top 10 stocks that we're tracking. Let's get to some fundamental analysis on each of them. Siddhartha Khemka, the head retail research at Motilal Oswal, joins us on the show. Hi, Sid. Good morning. Thanks so much for joining in. Well, tell us about TVS Motors. That's been the big outperformer. The numbers were pretty good. Sonia just told us about that. How would you approach the stock at around 1,600 rupees?
Yeah, very good morning, Nigel. Good to be on your show early morning. So I think results have been pretty good. However, we were expecting the good set of numbers from the auto sector itself. So more or less operationally, the numbers were in line with our expectations. It recorded highest ever EBITDA margin of 11%, and which was an increment of 40 basis points on a Q-on-Q basis. And we believe that there is further scope for margin improvement in coming quarters, led by operating leverage, low marketing expense, and there would be a strong earnings growth driven by recovery in the underlying segments as we expect the margin improvement to be there. But on the flip side, what looks like is that the valuation seems to capture this upside with almost stock trading at 35 times FY24 and 30 times FY25 P. So that we believe that there could be little room for upside, given that the other two-wheeler companies are trading at a steep discount. So while we are positive on the overall earnings and the growth trajectory, the valuation looks capped, and hence we are kind of a neutral rating on TVS Motor.
Hey, that's interesting. You have a neutral rating on TVS Motor. There's also a bearish view. Nomura has in fact downgraded the stock to a neutral. They have a target price of 1760. I think the one concern is that the subsidiaries continue to be loss-making. So there's a bit of a drain, right? A cash drain on that front. And that may sort of put a lid on the gains. And the stock, of course, has rallied a lot. But Siddharth, good morning and thanks for joining in. There are plenty of other stocks that I do want to talk about. DLF is the other one. Highest ever collections this time at almost 2,400 crores. And the commentary from all other developers, whether it's Macro, Tech, Prestige, is that the going is very good. From this entire lot, what are the stocks that you prefer in the real estate space?
Yeah, so if you look at, I think a lot of these real estate companies, they have been announcing, at least on the operational front, which is the pre-sales data has been pretty strong. And even for DLF, you've seen that some of the luxury segments that they have launched have all been lapped up in record times. So I think that is something which has been a big positive for the entire real estate space, where the demand, despite the increase in the interest rates in the last in the last few quarters, demand has still been pretty strong. We also had the Macrotech numbers, the Oberoi Realty numbers. So within this space, we like two stocks. A is the Godrej Properties, and B, Macrotech Developers. They also came out with numbers. They reported sales booking of 35 billion, which was up 12%. Overall sales stood in line with our expectations. And with this quarter, if you see the total first half pre-sales of almost 70 billion is up 15%. And company has achieved 50% of its pre-sales guidance. The management commentaries regarding the festive sales and festive bookings have been pretty strong, not only for the real estate sector, but I think across the industries. The festive season, at least so far, has been pretty good, and we will still have the upcoming festive season of Diwali and the New Year. So I think it looks pretty good. And as I said, within that, we prefer a Macrotech Developers, where we have a target price of 900, and Godrej Properties, where we also have a buy rating.
Got that, Siddharth. Hi, good morning. Did you, actually so much to discuss, right? So many numbers. M&M Finance sold off 10% yesterday. There was an AU Bank acquisition. By the close of it, the market was, and I guess like it, at least the first cut, AU Bank was down sharply. But I want to talk about Supreme Industries, which reported numbers. By the way, we had the management with us as well. Supreme Industries rallied some $400-500 in the last 30 minutes of trade yesterday. A huge move. Numbers came a little earlier. There's almost a full 1 percentage point increase in margins for Supreme in the second quarter. Any thoughts, Sid?
So, Prashant, unfortunately, we don't cover Supreme, so I have not had a look at it.
What about the other two, M&M Finance or AU Bank? Would would the second quarter numbers for M&M Finance be a durable derating kind of event, or people will come around to this one?
Yeah, I think if you look at M&M Finance, PAT was a sharp decline, 48% decline, and even a sharp miss, 44% miss. But as you said, yes, I think until the 2 quarters ago, M&M Finance had managed to reduce its volatility in its NIMs and had shown sharp improvement in its earnings performance, led by streamlining of operations, enhanced risk management. But has now they have reported 2 quarters of back-to-back earnings miss in a kind of way, which is kind of leading to these pressure in the overall numbers. I think the management is guiding for a change in the product mix, and overall growth, I think, will remain pretty stable. So having said that, I think so we have a positive view. We believe that M&M Finance is going through a transformation in its product and customer mix. NIM profile will change with and will find a suitable normal, where the market will also find some time to adjust to the new change. Valuations are now comfortable at about 1.7 times FY25 price to book. So we believe that risk reward is favorable, but there could be 1 or 2 more quarters of pain where the transition keeps happening.
Now, Siddhartha, Khemka is still with us, so let's go to him. Siddhartha, there were many other, good numbers that we saw. Nigel was speaking about Vesuvius, 20% margins on that business. Blue Star saw very healthy growth, revenue growth of almost 20%. Something like a Spandana Spurti was very strong as well. AUM growth almost 70%. Any of these companies that you liked in terms of earnings?
Yeah, so I think a lot of these mid caps have come out with strong numbers with the likes of Spandana Spurti, where we have a very positive view for the entire MFI space. I think that is doing well and kind of seeing a good recovery. If you look at the numbers, that has been pretty strong. PAT was up 127% and 6% higher than our expectation, driven by the higher other income. NI grew 70%, which was in line. The company continued to pursue its customer acquisition-led growth with the addition of 350,000 borrowers, which is again a good growth. I think if you look at the core numbers, there hasn't been a healthy AUM growth, and in line with what we are seeing across financials, there is a minor compression in NIMs. But if you look at overall, we believe that the new management has successfully navigated through various disruptions and has led to the consequent improvement in the asset quality. And with the strengthened process, it is now ready to capitalize on the strong opportunity in the MFI sector. We are expecting ROAs to improve to 4.4% by FY26. And hence, we believe that it's a good stock, Spandana Spurti, in the entire MFI space. We have a target price of 1100, which is almost 20% upside from current levels.
Okay, all right. Just stay with us, Siddhartha. I think we're getting some commentary coming from the Bank of Japan. They've maintained, their policy stance, I think. So, no big surprise, I think, that's coming out of that. We'll try to get in further details. But I think it's just coming in the 10-year yield, I think, is what they're talking about. They're likely to keep easing patiently for price call and wage gains as well. So I don't think there's any big surprise. We'll try to get some of those lines that flash for you on the screen. Well, Siddhartha, final question before we let you go. In a short while from now, we'll have the management of APL Apollo. That's been a big winner. The numbers were a little bit lower than what we were working with. Your view on the stock at these prices?
I think APL Apollo has been consistently delivering strong numbers. The space that they are operating in, they are almost like market leaders, and they have been consistently doing well quarter after quarter. So this was another quarter where they reported healthy volume growth of 12%. The product mix is improving. They have been consistently adding capacity. So we believe that with incremental capacity from the newer plants, plus the debottlenecking, plus the addition of high margin products from the Raipur unit, which should result in strong volume growth and margin expansion. So the good part is that the growth continues. We are expecting a revenue growth of almost 30% and PAT growth of 50% in the next 2 years. So I think it's still a top pick in the mid-cap space from us. We have a target of 1930. and I think the stock should continue to do well.
Siddhartha, stay